Africa's most industrialized economy has struggled in the past few years to find its footing. The COVID-19 pandemic exacerbated already present issues that South Africa is dealing with. Higher than ever unemployment figures, millions out of work, civil unrest slowing down recovery, and a strike in a critical sector all impacted the gross domestic product. All of this happening while there were blackouts across the country as load shedding returned throughout the year. There is no doubt that South Africa has reached another growth and development crossroads. Getting back to pre-COVID-19 levels could take at least 5 years. And unlike the 2008-2009 crisis, when the economy was propped up by strong global growth, the country cannot rely on a linear international rebound to lift its GDP. Progress on structural reforms has been slow, mainly due to a lack of political consensus. And after 5 years of low growth, declining investment, and rising unemployment, South Africa needs a bold implementation of reforms to face mounting challenges and restore the country's economic growth potential. Today, we're looking back at the challenges one of the continent's leading economies faced in 2021. I'm Tolulope Adeleru Balogun. Welcome. This is Business Edge. And join me now from South Africa is Christie Viljoen. He's an economist with PwC in South Africa as we go through the challenges that the country has experienced in this year. Christie, thank you so much for joining me. Welcome back to Business Edge.
Thank you very much.
All right, so let's start with the growth projection that was estimated, I'll say that, for South Africa. So growth projection was at 5.2% in hope that was where the country would end 2021. Now it's expected to be about 1.9% in 2022 and then drop further in 2023. And this is hinged on high commodity demand, sustained high prices, as well as government revenues until mid-2022. But with the civil unrest that we saw a few months ago, the recent fourth wave that has started now, where do you think South Africa will end the year when it comes to its projected growth?
There are obviously many forecasts out there, and they're quite diverse, to be very honest. We know that the Reserve Bank thinks economic growth of more than 5%. Our own number is closer to 4%, actually just a little bit below 4%. I think one of the main factors that hasn't really been looked at is the lasting impact of that social unrest. We know from the third quarter GDP data that there was a decline in GDP, and mostly because of this unrest. I think the negative impact on the fourth quarter will be quite significant as well. So that's why we're not as optimistic about overall economic growth. I think many of those forecasts were also made on the assumption that we would see many international tourists in South Africa right now, because this is now our summer holiday season. Very popular traditionally with international tourists. And when this Omicron variant became public, we saw about 500,000 travel bookings cancelled from abroad. That's about 5, 6, maybe 7 billion rand that South Africa will not be earning this year. Our offices are in the waterfront in Cape Town. It's very quiet. So there are quite a few things like that I think that hasn't been taken into account in such lofty forecasts. So I'm thinking it's not going to be easy for us to reach that kind of total growth for 2021.
Where do you think the number will end? Will South Africa manage to break into the 5%, or we're looking more around that 4 or 3% for the growth throughout at the end of the year when everything is put together?
I think 5 is a bit too optimistic, probably between 4 and 5 somewhere. We're still waiting to obviously see some of the most recent monthly economic data. The official fourth quarter GDP data only comes out in March next year. So there's still some time for economists to revise their forecasts. Another important factor that we are thinking about right now, yesterday, today, tomorrow, is whether with our fourth COVID-19 wave on the go at the government will be imposing additional restrictions over these coming holidays. So the second half of December, traditionally a very family-oriented holiday period, people getting together for family, for Christmas and holidays. And we have to take into account the risks that involve from a health perspective. So that could also impact the way that South Africans travel in the next few weeks, where and how they spend their holiday money. So that's a final uncertainty that we have to deal with in the next few days, the next few weeks, and then probably only next year make adjustments again to those kinds of forecasts. So definitely no certainty yet on what the fourth quarter really would look like from a GDP perspective.
All right, and something else many people will be watching very closely for the fourth quarter is South Africa's unemployment numbers. The year has not been a good one. So in the first quarter, we had South Africa setting a record with the then highest at 32.6%. And nobody anticipated that records would then be sent in the next two quarters after that. So the last quarter had 34.9%, and we know, of course, COVID was a major factor to this, but it wasn't the only factor. So what else has accounted for how bad unemployment has gotten in South Africa in 2021?
Correct. Record high unemployment rates. We are also now the country with the highest unemployment rate in the world, both the total unemployment as well as youth unemployment. So yes, COVID-19, we can certainly blame for a lot of this. Our economy lost just over 2 million jobs in the second quarter of last year when we had the most severe lockdown due to COVID. We were able to get back about 800,000 of those jobs in the second half of 2020. And then lots of expectations for job growth in 2021. But actually, most of those jobs that we got back in the second half of last year, we've again lost them. Which isn't really, we can't really blame it too much on COVID, to be honest. Yes, we had quite strict lockdowns in the middle of this year as well. But the big other factors are the social unrest that you mentioned. So in July, we had in a few of South Africa's provinces, we had damage to physical infrastructure, to public enterprise, to private business, a period of about a week where there was just lots of looting and violence and destruction of infrastructure. And that's obviously got a lasting impact. So certain businesses were not able to open up after that. And the other big factor that we are struggling with, and it was a problem before COVID-19, it's going to be a problem for next year onwards, is the reliability of our electricity supply. For South Africans, it's now pretty unusual suspect to just open up your phone, read the news and see, well, there's electricity load shedding again. That's what it's called, basically, where electricity is rationed. You could see 2 hours of power outages a day. Sometimes it's 4, maybe even 6 hours. And it comes at unexpected times. You never know how long it's going to last. So it's that unreliability, and then obviously the high cost for businesses to compensate, the cost of alternative energy sources, that for some of them, it's just too much to bear. So it's that energy insecurity that's also weighing on our economy's ability, not only to create jobs, but to retain jobs as well. So those are probably the biggest factors that I would blame in 2021 for our inability to get this employment situation under control.
I'll ask you the same question I asked when it came to the growth projections. Where do you think South Africa is going to end the year when it comes to the unemployment figures when they come out for the fourth quarter? Are we expecting to pass into that 35%? Will it maintain around this 34.6, 34.9%? Could it possibly be a declining figure we see at the end of the year, for the end of the year?
Well, usually we would say that the fourth quarter unemployment rate number is generally a bit lower because of temporary unemployment around hospitality and tourism, so restaurants, hotels, because people go on holiday, because we see many international tourists, there's temporary jobs that get created for a short period of time. So in a normal year, I'd say probably the fourth quarter number would look better. But in the context of how many international visitors we lost in the past few weeks because of this Omicron situation and travel bans, I'm quite comfortable, well, I'm not comfortable. I'm quite ready for the fact that the fourth quarter unemployment number could go higher still. We could see another quarter of climbing unemployment, another quarter of climbing unemployment rate. And then we have to think of the first quarter next year, when a few 100,000 high school students that now finish their high school this year actually enter the labor market as well. So our labor market is going to grow. The amount of people looking for a job would be growing. And youth unemployment is a massive problem in our country. So the outlook for the first quarter of next year is probably also not great. It is something that is of great concern, and that's something that's progress has actually been very slow to address.
Unemployment issue, and we've talked about it when we talked about the latest figures that came out, and that's the growing number of people who can work but are discouraged from looking for a job. And that's a really big chunk of the unemployment figure that South Africa has to deal with. And that number has grown throughout the year. Do we have any context to it? Do we understand why we're seeing more South Africans who can work but are basically refusing to even look for employment, and how maybe that can be addressed into 2022?
It's an important number to take into account, because when we talk about an unemployment rate of 34, 35%, which is the official number, that does not include people that are willing and able to work but have basically given up on finding a job. If you add that, your unemployment rate probably climbs to about 45%. So there's about 2 or 3 million South Africans, working age adults with the ability and willingness to work, but they've basically through all their years of searching for a job, or in the communities that they live and the situations that they face, they've decided the chances of me getting a job is almost zero, so I can just as well not look for it. And that's what we call a discouraged worker. So literally they are discouraged in their ability to find a job. It is something that is of great concern to analysts, to government, to the private sector, because these are people that can work. Many of them have the skills to perform a job, but because of where they live or different kind of circumstances, they can't find a job. And heading into 2022, I think, is a big issue. If you've got so many people that are able and willing to work but have basically given up, it sends a message about confidence in the economy to improve one's situation. It sends a message about confidence in your own abilities, in your own skills, and someone that sort of climbs into this discouraged group, it's very difficult for them to then get back into the labor market, to be a competitive worker again. So it's almost a bit of a lost generation, people sitting at home that can't find a job. So that's a massive concern, especially if we think of, again, the unrest we saw in July this year, people sitting at home and then taking to the streets, and the fallout that we had from there. It's a big concern for our economy and our socioeconomic stability.
And I'm happy you brought that up, because I wanted to go back to that very quickly before we take a break. Now, the South African Property Owners Association said that the cost of that unrest was over 20 billion rand in the KwaZulu-Natal area, and about an overall impact to the national GDP was about 50 billion rand. Over 200 shopping malls, over 1,787 businesses. So that's jobs, that's taxes, that's income back to the families, income into municipalities as well, that's been gone. What relief do we know at this point in December now has come for some of these business owners and the employees as well who were affected by this?
Yes, those numbers are very concerning. KwaZulu-Natal, it's on our east coast. It's where Durban is, the port of Durban, one of the busiest ports in Africa. It's also the most direct port to Gauteng, which is, from a regional perspective, it's the biggest, let's call it, provincial economy on the continent. So it's a big disruption. What government did shortly after the unrest was they put together a fiscal package, about 38 billion rand. So that's about 2.5 billion US dollars. Which would directly support recovery of infrastructure, for example. It included some services to businesses to help them get through a period of difficulty. There was also money allocated to a state insurance company, which is basically the only insurance company in South Africa that guarantees businesses against this kind of political unrest. So to ensure that they would actually be able to pay out these claims, a large part of that fiscal package was directed to them. The medium-term budget that was delivered about a month ago, early in November, emphasized the need for this kind of spending. Government also re-emphasized that up until March next year, they would be continuing with temporary social transfers. It is something that we saw in the beginning of COVID-19, where government stepped in, increased their social spending, increased the amount of money transferred to poor people. It's a way of sort of handling the situation at the moment. Long-term solutions to the problems that were highlighted in July are still with us, not really addressed. So at the moment, it's, I guess, a case of putting some money towards the problem until, I guess, there's maybe a long-term solution. But as you said, with structural reforms, it's something that's very, very slow.
All right, Christie, we're going to take a break. When we come back, we'll get into the load shedding, electricity conversation, taxes, vaccines, and of course, that structural reform. We are seeing some African countries take the opportunity of the COVID-19 pandemic to institute much needed reforms. Has that been the case with South Africa? The conversation continues as we look back at South Africa 2021 in review. Do stay with us. And you're watching Business Edge. My guest joining me from Cape Town, South Africa is Christie Viljoen. He's an economist with PwC South Africa. Now, Christie, let's get into the conversation around job losses and also the electricity conversation as well. Now, one of the things that we know has contributed to job losses in South Africa is the electricity situation, Eskom, and all attempts around it. So after 11 weeks without power outages, the country went back into load shedding during the second week of October. And in a research note from October, PwC also said that the baseline scenario is that for some time to come, there will be power cuts. And we're looking at some of these power cuts that could potentially cost the country about 350,000 potential jobs. Has South Africa made any headway in the past 1 year towards addressing the electricity situation?
Well, I mean, we often see reports and updates from Eskom on their progress. The current management and the current CEO specifically is trying to be very transparent on what they're doing. I think that there's certainly progress in some areas, but then it's a case of 2 steps forward, 2 steps back. We know that the biggest challenge with this electricity load shedding is the unplanned outages. So you've got planned maintenance, planned outages of generation capacity, and then there's the unplanned, which just happens overnight. Something breaks, something fails, something can't be replaced, and then a power station or a power unit goes down. So on the question of have we made any specific progress, I'm sure there will be some technical reports that say yes, and there will be other reports saying no. I think the fact that we are expecting load shedding to happen anytime, and we don't know how long it's going to last. It basically sends a signal that we probably haven't made enough progress. There have been forecasts about how load shedding could look in the next 18 to 24 months. We've seen that before, and it hasn't been as expected. So what I often think these days is to tell businesses, load shedding is part of the normal business environment for you. It's part of operating. And I guess if there's been real progress, then we wouldn't be taking that kind of stance. We would know that an end is in sight. But at this stage, probably we can't say with much certainty that an end to load shedding is in sight.
We had the president announce an unbundling of Eskom, also increasing the amount that independent power producers could also produce and possibly give back into the national grid. Is that a bit of the progress we're looking at, even a conversation and some movement around expanding the opportunity for renewables in South Africa?
No, it is certainly good news. Like I said, there are steps in the right direction, and there's steps in the other direction. We are taking on slowly over time increasing amounts of green energy, so that's good as well. But I think if we have to consider the normal South African at home or a business, what their experience is of using electricity, it's unreliable. We've seen Eskom apply to increase their prices by another 20% next year. The past decade, we've seen prices go up every year by 10, 15, 20%. So it's tripled the price of electricity in a very short time. So that's the basic experience that people are seeing. So I don't think we can really say that the normal South African is seeing a difference. At a high level, yes, there is some progress. We saw a while back that a group of rich countries have pulled together and announced that they want to give South Africa access to 130 billion rand to move away from our dependence on coal for electricity towards a greener future for our energy supply, which is great news. The challenge is it's not a gift, it's actually finance that Eskom would have to take on. Eskom is already over indebted. So it's good news that we've got access to this money, but at the moment Eskom can't take on this extra debt to move towards this greener energy situation. So I guess there's lots of good things to mention, but you've got the negatives as well. And are we really in a better position now than we were 12 months ago? Probably not. And that's probably the answer to, have we really made progress? I don't think we've made much progress.
All right, so let's get back to the president. Just recently, President Cyril Ramaphosa tested positive for COVID-19, and this is probably an indicator of how severe the COVID pandemic continues to be in South Africa. About 35% of South Africans are fully vaccinated, higher than most other African nations, but lower than the government's end of the year target. How much of the country's recovery and growth for 2022 is hinged on pushing forward with its vaccination drive?
I think economic growth next year is probably less dependent on COVID developments than it was this year, but it's still very important. Like you say, 35% of the adult population fully vaccinated. Many more people will be in the next month or two because of the two-shot Pfizer dosage. So many people that are currently partially vaccinated will be fully vaccinated soon. So we are making progress, but it is slow. It's below target. And I think what's happening now is that with what happened with Omicron, the world again realized that we are not making the progress that we should be. We have the risk of this fourth wave of infections being an elongated one. The third wave was longer than the first two. If this goes a few months into 2022, we could see continued travel bans from many countries, the loss of tourism revenue, for example. We could see the risk that by winter 2022, the middle of next year, there could be a fifth wave of infections, which probably would not see as severe economic lockdowns as we've seen in the past. But nonetheless, we have to handle this situation. So I'm concerned if we don't get enough people vaccinated and if we don't get prepared enough sort of in the eyes of the international community, we'll continue to face these travel restrictions, which not only limits tourist travel, but also business people. It's negative for investment from international sources, also from local sources. You don't know when the next lockdown would be, don't know what it's going to look like. And all of these things actually negatively impact on local business confidence. And that's the confidence you need to build to get jobs created. You need local private sector business to feel confident that COVID is under control, that the economy is moving in the right direction, because then they will invest in people and physical infrastructure. And I don't think at this stage we've got that confidence for companies to say 2022 is the year that we're going to build, we're going to expand, that we're going to grow. That confidence is simply not there yet.
Here, focus remains on one of the leading economies in the continent and, of course, the most industrialized, and a lot of hope for South Africa as well as Nigeria that in them being able to recover and grow, it also pulls up the rest of the sub-Saharan region of the continent. Christie, thank you so much for joining me on Business Edge. We'll be touching base with you. And if we don't see you again, compliments of the season until 2022.
Thank you very much. Hopefully next time we speak, we've got some more good news.
Definitely. And that's what it is. It's projections and looking back on the estimation for South Africa, which leads in many areas, both positive and negative. Now the highest unemployment rates in the world, also the highest inequality rates as well. Now, while South Africa's medium-term economic outlook has improved slightly in 2021, primarily due to improving global conditions, its economic health is still in fragile territory. Structural constraints, lack of investor confidence, and continuing fallout from the pandemic on jobs and investments will undoubtedly have long-term adverse consequences on the economy and people's livelihoods. You're watching Business Edge. NC4 to Watch is up next. And we start NC4 to Watch in the southern part of the continent, where hundreds of thousands of Zimbabweans in South Africa under the Zimbabwean exemption permits have been granted a reprieve after the Department of Home Affairs unexpectedly withdrew its directive issued last month, which required them to apply for mainstream visas. Right now, we still don't have any idea why the directive was issued. MTN Nigeria and MFAB Communications have been awarded Nigeria's first 5G high-speed spectrum licenses at an auction held by the country's telecoms regulator. The licenses are in line with Nigerian Communication Commission's promise in July to start auctioning spectrum for the next generation 5G network in the fourth quarter of this year. The World Bank has announced a $150 million electricity recovery project to light up Somalia. According to a statement from the bank's International Development Association, the project will provide access to clean and inexpensive electricity for 1.1 million households, or around 7 million people, including 3.5 million women. And finally, Meta Platforms is in the pilot phase for its stablecoin payments wallet. Now, this comes as the world's largest payments processor, Visa, launched a crypto advisory service and said stable coins might become the medium of exchange rather than cryptocurrencies. Stable coins are a form of virtual currency with values pegged to traditional assets such as the dollar or commodities, and their rise has accelerated discussion by central banks across the world about digital versions of their currencies. And that's Business Edge for today. Don't forget to follow us on social media. We are at News Central TV. Head to our websites, download our mobile app, take us with you wherever you go. And of course, stay right here, 11 a.m. West African time, Monday through Friday, where we put the biggest business, economic, and financial stories out of the continent front and center. I'm Tolulope Adeleru Balogun. Have a pleasant day.